Hi, traders. Hola, mis traders. Hi, traders. Let's go. Let's get ready. I hope you're ready. Let's do this. Woo! I'm ready. I hope you're ready. I only need a little bit of your time today. I'm going to do my best to blow your minds today, to blow your minds. I hope you're ready. So traders, I want you to sit back, relax, grab something to write with, grab a pen, grab a notepad, grab the beverage of your choice, all right? And get ready. It's going to be my job today to take you to a new level of market sophistication. It's part of my job today to share one of my most powerful trading tactics with you. And it's going to be my goal to make sure that we leave this presentation today with you being able to actually do this in the market every day, not every couple of weeks, every single day. That's my goal, to have you walk away with something that you can use for the rest of your trading life, you know? All right, let's go. Let me get this music off here. All right, traders. Now, I am aware of the fact that there are a number of people attending this event in either English, Spanish, or Portuguese, because this event is being held in 3 languages simultaneously. So I'm sure that there are a number of people from around the world who have been attracted to this event, but don't really know exactly who I am. So for those of you who do, just bear with me a few minutes. I do have to give a brief introduction of who I am, why I'm in front of you today, and why I have a right to actually share a portion of my experience with you, because in reality, everyone has not really earned that right. They may try to exercise a right that they don't have, but a lot of people in this industry really don't have the pedigree necessary to truly share their experience. But I'm hoping that after the next few minutes, you realize that I'm one of the few individuals that really I've earned the right to actually talk to you from a point of experience. And I would like to share a part of that experience with you today, all right? So, why don't we do this? All right. I want to first tell you that I have been trading the markets for what some might consider to be a very long time. I placed my first trade ever in the year of 1981. It was March of 1981. It was my dream from the age of 15 years old to really be a professional market participant. And a variety of things inspired me to do that, from the experiences that my father had in the markets, to a family friend who was a market specialist, worked on Wall Street, to a variety of books that I read. But I started having a fascination with the markets when I was a teenager at 15 years old. I placed my first trade in 1981, and in December of 1986, my dream became a reality. I started my professional trading career on Wall Street in December of 1986. I would go on to do extraordinarily well on the street, and decided in 1994, after an 8-year period of huge success and a great deal of popularity and notoriety on the street, I decided to take a bold step that was not very easy for me. I decided to start my own independent trading firm. And at the time, many of my colleagues said, "Oliver, why are you doing this? You have a secure career. Everyone knows you. Your future on the street is bright." But to be very honest with you, despite how well I was doing on Wall Street, I still felt like I was an employee. And that is not something that I was actually comfortable with. I wanted to be 100% independent. I wanted to be my own person, my own firm, my own company. And it was scary. But in September of 1994, I started my own company. That company was called Pristine Capital Management at the time. Many people throughout the world would later refer to my company as Pristine.com. Pristine.com, over a 12-year period, became one of the largest and most recognized trading organizations in the world in the industry. We became the pioneers of short-term oriented trading all the way back in the early 1994, in the early 1990s, and I started that company from my basement apartment in the Bronx, New York. That is right. I would later become known as the father of swing trading. Many people don't really know this, but I coined the term swing trading. Some people refer to me as the creator of the style of swing trading. In 1992, I held a very popular interview on one of the financial channels. It was FNN at the time, which later would become CNN. And I coined the term during that interview, a specific style of market play. And if you Google Oliver Velez swing trading, you will actually see references to many of my early work back in the 1990s, and no work on the style called swing trading predates my work. All right, so I'm known in the industry as being the father of swing trading. In 1998, Barron's, which is a very, very respected institutional style paper that comes out once a week, Barron's ranked me and my company #1 in the United States. So I was ranked the #1 place to go to if you wanted serious market and trading experience. Dow Jones dubbed me in 1999, a year later, the venerable Dow Jones dubbed me the Messiah of trading. And in the years 1999 and 2000, I was accepted with the honor of being the spokesman for the entire trading industry, and I was the first inaugural keynote speaker to the very first International Day Traders Expo. And I received this honor in the first 2 years of 1999 and 2000, and was later invited actually back this year to be the keynote speaker for the entire industry. I'm also the best-selling author of 5 trading books across the world. These 5 books are written in 5 different languages: English, Spanish, Japanese, Mandarin, and German. And I currently operate one of the largest trading organizations in the industry and in the world, with over 10,000 traders spread over 96 different countries worldwide. I continue to advise and speak for financial organizations globally every single year. Now, this is an article back in 1999 that was written on me being selected as the keynote speaker and the representative for the entire trading industry all the way back in 1999. This is the article that came out in Barron's that ranked my company and me as having the very best services for professional traders in the entire industry. That was in 1998. This is an image of just a few of my books in all of the different languages. And traders, I'm the most published trader in the world at this particular point. If you were to Google Oliver Velez books, you would get sort of like scrolling pages of this, just references to my books in all of the different languages. And last but not least, I do want you to know that I'm relatively prevalent on most of your social media networks, and I truly like for you to follow me. In particular, you are here on my YouTube channel, and this is where I spend a great deal of time making sure that I put something out every single day of the year that will help inch you towards your ultimate goal of becoming a more sophisticated market player. And I deal with all the topics of trading on my YouTube channel, from psychology to tactics and strategies to mindset to risk management, trade management. All the aspects of trading are dealt with here, and you receive something every single day. So I want you to, first of all, like this presentation. Click the like button on this presentation that you're watching now. That's number one. Number two, I want you to make sure you subscribe to the channel. There's an English channel, a Spanish channel, and a Portuguese channel. All right. I also want you to turn the notifications on by clicking the bell in the upper right-hand corner to ensure that you never miss me going live on this channel and you never miss a single piece of content, because I believe that if you spend the next several months receiving these daily educational and informational things that I put out every single day, you will inch yourself toward becoming more and more sophisticated and more skilled as a market participant. I also want you to follow me on Instagram, where I'm constantly putting out throughout the day content that's designed to motivate you, to also train you, to keep you in this wonderful game we call trading. I at times do trade live and talk to you live on a more intimate basis on my Periscope channel, which you can find an English one at Oliver Velez 007, and the Spanish one, Espanol Oliver Velez as well. And of course, there's Facebook. So make sure you're following me on these networks so that we can stay close together. I do my very best to answer your questions whenever you are confused or have a question about something. And these are the best ways to stay in touch with me and to stay close with me, should that be your desire. All right. So guys, look, without any further ado, I would like us to begin the presentation. Now, as I mentioned, I want you to grab a pen. I want you to grab a notebook if you can. I want you to take some notes as we go along. But at the same time, I don't want you to take notes in such a way where you begin to miss some of the things that I'm talking about. So take your notes in a summary-like fashion, okay? Because we're going to build this concept, this tactic. I want to build your knowledge around this tactic layer by layer. And so I don't want you taking notes on layer 1 when I'm already on layer 3. Do you understand? So that's going to be very important. All right, so take notes, but take them in a summary way, and you'll always be able to come back to this presentation and do more detailed notes as you review the recording of this live event. Okay, I do want you to understand that yes, while this is free, this is not fluff. This event is not designed to sell you on anything as much as it's designed to teach you this one specific tactic that you'll be able to utilize in any market. Now listen to me carefully, traders. This is a tactic that is not just unique to the stock market. Yes, I'm predominantly a stock market trader, but whether you trade cryptocurrencies, whether you trade options, whether you trade futures, whether you trade currencies, Forex, it doesn't matter. Markets all operate predominantly the same way. They're a bunch of buys and sells. The players might be a little bit different. They might be a different size, but for the most part, psychology in every market is the same. The cycles that operate in one market are the same cycles that operate in another market. And in addition to this tactic being applicable across all markets, traders, I want you to understand that it's also applicable across all time frames. So whether you are an intraday day trader, or whether you are a swing trader, or whether you are a long-term investor, it does not matter. This tactic will have some relevance across all styles, all markets and all time frames. So that's very important to understand. All right. And so there we go. Let's get started. Let's get started. All right. Now, the most powerful event, it is not the only event, I want you to understand. And while you might not be able to make a living every single day with just this one event, I will tell you that it is amongst one of the most powerful events that I've been trading with over the past 3 decades of my life. And I'm going to share it with you today. Now, this tactic is what I call the 180. I call it the 180 because it is designed around a concept of turning the market around in a 180-degree direction. Now, I know some of you are looking at this and you speak Spanish or you speak Portuguese. This slide happens to be in English, but don't worry about that. I'm going to explain it to you. You don't have to read the words. Now, there are 2 types of 180s. There's the bull 180 or the positive 180, the 180 that we buy. This is the bull 180. And then there, of course, is the bear 180. This is the negative 180. This is the 180 that we sell or we short with the idea of profiting on the downside. The bull 180, all right, the bull 180 has great odds, means that your stock or whatever you're looking at has great odds of moving up from here. Your bear 180 is an indication that your stock or whatever you're looking at has great odds of moving down from here. Now, I have found that teaching a concept from the buy side is far more understandable than teaching it from the short side or the sell side. So let's start off with the bull 180. The first criteria of a bull 180 is that the stock that you're looking at displays a fat red bar. This bar here, a fat red bar. Now, I call this an elephant bar. We call these elephant bars. What's a fat red elephant bar? It is a bar that is relatively tall from top to bottom. It can have, the bar is mostly the color red. It can have some wicks at the top or the bottom, but the vast majority of the bar's range is red. There's a fat, chunky piece of red that makes up the bar. It is not a bar like this. Let me show you. This is not the bar we're looking for. You see how this bar has some red, but the bar's range from top to bottom is not mostly red. It is only a small portion of the bar's range from high to low is red. This is not what we're looking for. We're looking for a truly solid bar that is mostly red. If it has some excess on the outside of its red, that's fine, but not much. That's what we're looking for. We're looking for fat red, solid red. Now, this fat red bar is immediately wiped out by an even fatter, longer green bar. Now, this is key, traders. This is the 180-degree turn. This is the 180-degree switch. This is the green immediately overpowering the red by superseding the red's high. Now, this immediate turn is the key to the bull 180's power. Now, I want you to note that in my image, there is no additional red after the first red. So look, there's no additional red down here. It's just the red stops and green immediately begins the next bar, and green wipes out the entire range of the red bar. So in essence, green is wiping out this portion of red, then wipes out more. As the green climbs, it's wiping out more of the red and more of the red and more of the red and more of the red. And when it wipes out all of the red, boom, that is where I want you to put money into the stock. We put money into the stock when green immediately wipes out a fat red bar. Now remember this. I'm going to repeat this hundreds of times. When green wipes out, immediately wipes out a fat red bar, boom, we enter as soon as green supersedes the high. Now, this green bar does not have to finish. You buy into this bar while this bar is still alive, while this bar is still moving. All you're doing is waiting for the green to surpass the high of the red bar by 1 penny. As soon as it does that, boom, we want to put money into the stock. Now, not 100% of these things are going to work. So just in case this one doesn't work, we're going to place our protection 1 penny under the green. We're going to buy 1 penny above the high of red in the green bar. We're going to place our protection 1 penny below the low of the green bar, which means that we're only going to risk the 1 green bar. And if the market eliminates this green bar, boom, we're out 1 penny under the low. We risk only the size of 1 green bar. We do not risk 2 green bars. We do not risk 3 green bars. We only risk 1 green bar. I need you to understand this. So this is the bull 180 in a nutshell. We're waiting for our stock to demonstrate a fat red bar, criteria 1. Criteria 2, there can't be additional red after the fat red bar. No more red after the fat red bar. Criteria 3, a green bar immediately wipes out all of the red bar. Criteria 4, boom, we buy into the green bar 1 penny above the high of the fat red bar. Boom. Criteria 5, we place a protective stop 1 penny below the low of the green bar. We only risk 1 bar. All right. That is the bull 180. Now, let's move on to show you very quickly the bear 180. The bear 180 is just the opposite. The first bar that you have with the bear 180 is a fat green bar. Now, fat green bars tend to lead to more green, but when they don't, traders, when fat green produces no more green is produced. And immediately, a fat red bar, an even fatter red bar, wipes out all of the green. Boom! We put money into the fat red bar 1 penny under the low of the green bar. Just in case it doesn't work, we place a protective stop 1 penny above the high of the fat red bar. So our risk is the size of the red bar. We risk 1 red bar. We don't risk 2 red bars. We don't risk 3 red bars. We risk 1 red bar. So the bear 180 is just the opposite. A fat green bar, criteria 1. No additional green after the fat green bar. No more green. Criteria 2. Criteria 3. A fat red bar wipes out all of the green. Criteria 4, we put money into the stock 1 penny below the low of the green bar. The red bar does not have to stop trading. We enter the red bar when the red bar is still moving, still alive. Next criteria, we place a protective stop 1 penny above the high of the red bar. And so, yes, for those of you who are not aware of this, we can profit from the market on both sides. We can benefit from the market, right? We can benefit traders from the market moving up, and we can also benefit when the market moves down. And to be very honest with you, traders, I enjoy playing the market down more than up. Why? Because down markets produce moves harder and faster, which means that down markets produce oftentimes big money, and big money faster than up markets produce big money. So up markets produce big money too, but not as fast. Down markets produce big money faster. And so I prefer to play the market down. I play the market both. I play what the market gives me. If the market gives me a bull 180, I play long. Boom. If the market gives me a bear 180, I really play that one. All right? I love playing the market down. So we as traders, we're not afraid of up markets or down markets. In fact, we pray for down markets. Okay? I want that to be clear. Let's move on to what we need. Now that you understand the tactic, what exactly do we need to turn this into money for ourselves? Let's talk about that next. All right. We need, in order to play in the equity markets, guys, we need anywhere between $50,000 and $100,000. Look, you can't play this game with a baby amount of money. This is not a baby game. You can't pitch yourself against some of the brightest minds on the planet, the most competitive market in the world. You can't do that with a little bit of money. It doesn't work. All right? And anyone who tells you that you can is really not being truthful, or they're too ignorant to know what the truth is. It takes money to make money in this world, and the stock market is no different. Small amounts of money is guaranteed failure. Small amounts of money make you trade incorrectly, which speeds up the day that you ultimately fail at this. Now, I don't want this to scare you, because I have the money for you. I provide the capital for you to trade. I put the money up for you to trade. I take the risk on you. You bring the talent, the ability. I bring the money. So I don't want you being afraid of this. All right. Now, very quickly, let me quickly explain to you what my traders, what every one of my traders must do when they gain access to this. I teach them a variety of tactics, just like the tactic I'm teaching you today. But it's not just one. I teach about 14 different tactics, right? I teach them how to play these tactics, how to identify them, how to turn these tactics into consistent daily and weekly money for themselves, income. Now, most people come to me don't have the proper amount of capital, so that's fine. I teach them and I provide them with capital, but what they must first do is they must show me that based on what I've taught them, they can take a $50,000 account and make $3,000 with it. That's their training. So their training, I bring traders on board and I train them in a two-tier process. Tier 1, I teach them the tactics. Tier 2, they take the teachings and they must pass this test. They must take a $50,000 account and make just $3,000. Once they make $3,000, they have graduated, and now we're in business together. So I want you to understand that I put traders in business. I teach them what to do, how to do it, and I fund their trading business. Now, I don't do this out of the kindness of my heart. I do it as a business. I put up all the capital. Once you demonstrate your ability to make $3,000 with this tactic and many of the others that I teach you, your $50,000 is now a real live account. My capital, you risk zero. Traders, listen to me. You never risk a single penny of your own money. You never risk your family's capital. You never have to worry about loss. It's my loss, not your loss. Okay? So I put the money in. Your goal is to make $3,000. You will get 40% of the gains. I get 60% of the gains. It's business. But you have zero risk. Okay? Then once you make $3,000, I make sure you have $100,000 to trade. You've gone to level 2. Now your goal is to make $6,000. You get 40% of the gains. I get 60% of the gains. Once you achieve the $6,000 goal, you go to a quarter of $1,000,000 trading account. Then your goal is $10,000. You get 40%, I get 60%, then you move to a $500,000 account. And so this is how hundreds of traders throughout the world have gotten into this professional trading business. I have been funding traders since 2007. All right? Teaching traders since 1994, but actually funding all the traders since 2007. All right? And this is how many traders throughout the world have gotten into the business. It takes money to make money, but I provide the capital and I provide the training. Okay? Now, what's interesting is that taking $50,000 and making $3,000 is not the hard part, especially with tactics like the Bull and Bear 180, which we're going to talk about in great detail today. That's not the hard part. The hard part, there are traders that make $3,000 in a day, $1,800 in a morning. That's not hard. The difficult part is to make it professionally. The difficult part is to make $3,000, right? Let me move this to the Spanish side. The English got their side. The difficult thing is making it without ever losing more than $300 on any given day, and without losing $600 on any given week. Now, traders, this is the challenge. You have to make the $3,000 without allowing the account to drop by more than $300 on any given day. Not Monday, not Tuesday, not Wednesday, not Thursday, not Friday. No days can you let the account drop more than $300. So when your account gets negative 250, negative 285, negative 295, boom, stop. No more trading until the next day. Don't let the account drop by more than $300. You can get that back. Just be responsible. The other thing is that you can't go negative by 600 at any point during the week. So now what becomes important? What is this training you to do? This is training you to move the account up, but to move it up responsibly. Let me show you something. This is very important to understand. All right, I'm going to show you something. Maybe I should do this with white. This is an account that goes up. Let me do this with a thicker pen. This is an account that goes up. And that's what we're looking for. But there are ways, there's a responsible way to move your account up in value, and there's an irresponsible way. So here's the responsible way. Let me show you the responsible way. All right, that's the responsible way. You see those down periods? They're not deep at all. Boom. That's the responsible way. These down periods are not deep. This trader never lets the account drop very deeply. However, here's the irresponsible way. The account's up, but this is what the trader does. That I'm not looking for. That is sloppy. That is irresponsible. And someone can say, well, Oliver, I started here and I ended there. I made money. No, you just got lucky. You're wild. You're irresponsible. No professional trading firm would ever trust you taking out the dog. Do you understand? Much less giving you 50, 100,000, $250,000 or $500,000 to trade. This is an uncontrolled trader that is dominated by their emotions, that lacks discipline, and has zero control. This trader is at the whim of every breeze that the market sends his way. The breeze is up, the breeze is down. All right? This is not a trader that is trading from skill, self-control, or discipline. Yes, the trader started here and ended there, but did not do it responsibly. All over the map. And so I think it's very important, traders. It's very important for you to understand that it's not just making money. Lottery winners make money. I was poor this day, now I have a lot of money this way because I won the lottery. But that doesn't mean that the individual is skilled at anything. That doesn't mean the individual has capabilities of anything. Winning only money is not necessarily equivalent to being a professional. Okay? You can just, listen, a rising tide raises all the boats. Okay, so it doesn't mean that that boat at that time is talented in any way. And so this is very important. I'm not looking just for traders that can show me that they've made money in a wild way. I'm looking for traders that protect my capital, that protect their capital. I'm looking for traders that understand that the number one rule in this game is don't lose money. It is not make money. And this is where a lot of traders go wrong. They think their responsibility is to make money. Your responsibility is not to make money in this game. Your responsibility is not to lose it. It's the stock's responsibility to go up and make money. It's not your responsibility. You don't go up. You don't push the stock up. No, the stock goes up by itself. It is the market's responsibility to make money. It is the stock's responsibility to go up and make money. But the market can't stop itself. So it is not the stock's responsibility to stop itself. It is not the market's responsibility to halt the game. That is your responsibility. So listen to the two responsibilities. The market's responsibility is to make money. Your responsibility is to stop the game when the market is not doing its job. I'm going to repeat this, and this will be our summary for how you take this $50,000 and grow it to $500,000. You have to understand the responsibilities. It is the stock's responsibility to go up when you buy it. That is not your responsibility. Get out of the way of the stock's responsibility, but don't meddle with the stock's responsibility. It is your responsibility to stop the game when the market is not doing its job, its responsibility. And so as long as you understand that the most important thing is don't lose money. $300 or less, that's not money, traders. You can get that back easily, but anything over $300, I consider lost money. $200? No, that's not money. That's a bottle of wine. $100? That's not money. We can get that back. Do you understand? But the moment you go $301, $302, you are now losing money. Rule number one, don't lose money. Rule number two, refer. All the way back to rule number one. There's only two rules in this game. Everyone wants to show me their winning trades. I don't want to see your winning trades. A rising tide can raise all the boats. So I'm not impressed with that. I want to see all of your losing trades. Show me how you lose and I'll show you who you are. Show me how you lose and I'll show you how much talent you have. Show me how you lose. I'll show you how disciplined you are or how undisciplined you are. Show me how you lose and I'll show you how steady, how calm, how patient, how responsible you are. Or I will show you how irresponsible you are, how wild you are, how untrustworthy you are, how you're not someone that I would even give a penny to. It's all about the losses. So if we go back here, traders, if we go back here and we focus on this, don't lose that and don't lose that. And guess what? That will take care of itself all without you. The $3,000 does not need your help. Where the market needs your help is here and there. And this is what you need to understand. Understand this, and you will make it. The number one reason most people don't graduate and make it is because they can't bring themselves to be responsible enough to not lose this and not lose that. But if you can do that, you will go from this goal to that one, to that one, to that one. I promise you. And you will never have to ever put a single penny of your family's money at risk. And guess what? If you lose my money, traders, I am going to kill you. No, I'm teasing. If you lose my money, I consider it my fault. That's right. You lose my money, that means I did not teach you properly enough. You lose my money, I will take 100% of the losses, 100% of the responsibility. You don't have to pay me back for the loss. All right? If you quit, you stop. Okay. Oliver, I'm sorry I couldn't make it work. Just not for me. Okay, my loss. I failed to get you there. And this is the proper way to do this, guys. To do this in a way that you don't hurt your family. To do this in a way to determine, do you have the capability to do this? Are you disciplined enough? Can you do this? Do it without risk to your family. This is the way. And this is the way I've given hundreds, if not thousands of individuals the opportunity to enter the professional world of trading without a big investment, without risking their family's money. Now, let's move on. All right. What else do we need? So we need the $50,000 to $100,000 account. We need a few other things. So after the $50,000 to $100,000 account we have, I give you that. We need a candlestick chart. We'll look at that. We need a 20-period moving average of the candlestick chart. We'll need a 200-period moving average of the candlestick chart. And we need my space concept, all of which I'm going to explain to you. Now, let's take a look at this chart. We're looking at a 5-minute chart here, right? This is a company called Rig. It's an oil company, and it's from the past, but it doesn't matter. This is an old chart, but it doesn't matter. I'm going to teach you, based from this chart, a few things. Number one, every bar represents 5 minutes of trading. So we can see that the first bar, this dashed line, represents the beginning of the day. So the first bar of the day, the first 5-minute bar of the day, this is 5 minutes, this is 10 minutes, 15, 20, 25, and all throughout the day. All right. Now, I want you to take a look at this 5-minute chart. Notice that we have a 20-period moving average here. That's the blue line. The green line is actually an 8-period moving average, guys, just in case you're curious about that. We use the 8 too, but we're not going to talk about the 8 today so much. But just to give you a quick glance, we ride profits out with the 8 a lot of times. So we just track that 8 and ride the move out. And as long as the stock does not break that 8, boom, we stay with it, okay? But that's how we use the 8, but that's a different topic, okay? That's a different part of the training. Today, we're talking specifically about the Bull and Bear 180, and we're going to bring in the 20-period moving average and the 200. Now, I want you to notice that the first 2 bars of the morning produce the very Bull 180 I'm teaching you to take advantage of. A fat red bar is bar number 1. Now, in most cases, a fat red bar does produce more red. All right. Now, this could have produced more red, but in this case, it didn't. It produced not a single ounce of additional red after the fat red bar, and immediately an even fatter, more powerful green bar, boom, broke above the high of the red bar. And this, boom, is where I want traders putting their money into the play. Now, if you have $50,000 of my capital, I always suggest that you take half of it. So you take $25,000 and you put it into the initial play right there. Boom, you're going to risk half of the account on the play. So you're going to put $25,000 into the stock right there. Boom, you're going to protect yourself 1 penny under the low. So this becomes your stop out point. All right. And as you can see, over a 5, 10, 15-minute period, we have a nice move to the upside. All right. There are some traders that ride this out as long as they, as the stock does not break the stop, and they can do that. But right now, I want you to just be able to identify the Bull 180. Now, there's something I need to also bring your awareness to. I want you to notice where the Bull 180 is happening in relationship to the 20-period moving average. Notice that the Bull 180 is actually on the 20-period moving average. So there are very unique events that happen at the 20 or on it. It doesn't have to be on it, but as long as it's near it and it becomes meaningful. Look at your baby Bull 180 here. So there are regular Bull 180s, and then there's the baby Bull 180s too, which I like. They're not as powerful as the mama and papa bull 180s, but the baby bull 180s can get their mojo on as well. Now notice where both bull 180s occur near that 20 period moving average. You see it? Near or on it. Look, near or on it. Now, remember how you play this. In both cases, you're going to buy this bar. This green bar doesn't have to finish trading. That might be 3 minutes into the 5-minute bar. That might be 4 minutes into the 5-minute bar, and there's another 1 minute left. It doesn't matter. You don't wait for the green to finish. You just buy the green bar. You put $25,000 into the green bar as soon as it crosses the high of the red bar. Boom. And you make sure that if this doesn't work, you're out 1 penny under that green bar. We're going to risk this for the possibility of this and maybe even this. All right. Now, remember, even on the baby ones, boom. Now, what I like about the baby ones is that your risk is even smaller. Look at what you're risking. Your stop is under the little baby fat green bar. And look at the potential gain that you made compared to the potential loss. Now, look at the loss. I'm gonna accentuate this for you. Look at your risk. And look at that gain that occurred. Now, all of them will be like this, but wow. Now, my question to you is, how many of these fit inside of here? You can lose 3, 4, 5 times and win once and make a tremendous amount of money. It's all about keeping your risk small in comparison to your potential gain. All right. Now, remember how I told you we use the 8-period moving average. We can ride this gain out. Once it gets above that 8, we're like, oh, wait a minute. Let's see how far this 8-period moving average takes me. And you just waiting with the 8, riding with the 8, riding with that 8, riding with that 8. And you're still in the play making money. Wow. All right. So what's my space concept? No space. So here is no space from the 20. No space from the 20. No space. Near the 20, near the 20. Okay, now let's move on. I got to show you others. Here is your 20-period moving average again. All right, in this case, I have them both red, but 20-period moving average and the 200-period moving average. Now look carefully. I want you to find the bear 180. I'll give you a minute here. I'm going to sip some coffee. You find the bear. Start from here and just move along and find the bear. Find that fat green bar that's immediately wiped out by a fat red bar. Do you see it? Can you identify it? Have you got this down enough right now after only about 40 minutes of talking to you? Can you look at this chart and boom, find the money? That's what I'm looking for. I'm looking for traders who can look at a chart and find the money. Oliver, I found the money. I'm looking for traders who can find the money, sort of like find the money in a few seconds. Find the money, traders. There it is. Boom. There's the money. Now, notice that the bear 180 is happening near the 20. It's not touching. It doesn't have to touch, but it's near it. And that's beautiful. When this bull or bear 180 happens near the 20-period moving average, wow, it's usually powerful. Now, I told you how a lot of times the traders ride out the play. And remember, I told you we ride out the play with the 8, but sometimes we ride out the play with the 20. So boom, here's your, remember how you play the bear? You enter 1 penny under the green, boom. How much do you put into that bar right there? $25,000. We don't play little. Some traders come to me and say, but Oliver, but Oliver, can I put 5,000? Can I put 5,000 in? Can I put five? No, we're not babies. We're not here to play like babies. I want aggressive traders. We're going to put, boom, $25,000 into this bad boy. I want to make money. I'm not talking about making change, guys. I don't want to make change. I want to make money. All right. It's my capital. I'm risking the capital. I'm putting it in your hands. Let's just play bold. All right. Sometimes I'm going to have you put all of it in, just not on the bull and bear 180. Why would I not have you put all of it into this play? Think about this, guys. Why is that probably not a good idea with this tactic? I have tactics that you put all of it in, but this one, we're going to put half in. Why? I know some of you know this. That's right, because the bar is big. Like, guys, when we lose, let's go back to the chart, right? When we lose with this, if we lose, we're going to lose the size of that red bar. All right, we got to suck it up. It's going to happen sometimes. So we don't want to risk the whole, but on a little bar play, maybe we risk the whole amount. You understand? That's very different. But a big bar play, we're going to risk half. On a little bar play, we can potentially risk it all. Why not? The risk is small. Guys, I am not a timid trader. I've never been a timid trader. I've been around timid traders. They never get to a place of really ever making big money, because starting the game as a timid trader gets in your DNA almost, and it's something hard to break out of. I've been around and have actually worked with timid traders that are good, but they never make the big money because of their timid. They're consistent, but they can't take it to the, so I don't even start traders off trading timidly. All right. We play big. We play sizable. Okay. And what makes this easier for a lot of my traders to do is that it's not their capital. It's different when you're utilizing your capital and you need this money to pay the rent next month, or this is the savings for your kid going to college in the next 2 years. You can't afford to lose that. All right. When we get rid of all of those concerns, or my God, Oliver, my wife doesn't know that I'm trading. If I lose this, she's going to kill me. This is our life savings. No, none of that nonsense. All right. I put the money in. All right. I put the money in, and we're going to risk my capital. So now you can not trade the markets boldly without being afraid. And if you lose it, as long as you lose using my tactics and approach, okay, I accept that. I accept loss. I can accept loss. I'm a big boy. All right. All right. Let's move on. Now, here's another chart. This is Facebook, guys. It's old, though. You know, Facebook is not $111 now. So this is old, but we're going to come to things that are recent. I'm just teaching you the concept. Now, guys, I want you, this is 1 day. We're looking at a 2-minute chart here now. See, 2 minutes. Now, every bar represents 2 minutes, 2 minutes, 4 minutes. This is the beginning of the day. All right. On this day, this is March 8th. Okay. Now, I want you to go from the beginning of the day and just, you tell me Keep going. When do you see a bull 180? Do you see it? You see it coming? You see it coming? Do you see it? Do you see it? Boom! I love that. There's your bull 180. Fat, relatively fat red bar. See, this could have been one. It's just the green didn't make it. This could have been one. The green didn't make it. All right. But this one, the green did make it. Boom! 25,000 in. Stop under the green. This is your risk. This is your potential gain. Now, there are a couple things. There's something I want you to note here. Well, before I do that, now I want you to, from this bull 180, I want you to keep going, and you tell me when you detect a baby bull 180. Goo goo gaga. The baby. Oh, tan lindas. How cute. Where's the baby? Where's the baby? Where's a baby? Boom! Guys, I'm sorry. I'm just, I'm silly like that. Silly like that, always. My kids say, Dad, you stopped growing up when you were 26. My mom says I stopped growing up when I was 16. It's true, somewhere in there. But remember, there's the full-size ones, right? And then there's the baby ones. We can't ignore the baby ones. Now, there's something I have to explain to you with this. This chart is very important because the full-size one happens at one location. The baby happens at another location, and both these locations are critical for our accuracy with this tactic. Let's go back to these locations, okay? Now look, the baby one happens where I told you is great, right at or on the 20-period moving average. This is the 20, all right? Now this is 2 minutes, guys. So in 2, 4, 6, 8, 10 minutes, you've got, what is this? This is almost, like, let's say if you did like, I don't know, this is like $350 in 10 minutes. There are some people listening to this that don't make $350 US in a week. There are some people listening to this that don't make $350 in a month. And this is in 10 minutes. All right. This is like $250 or more. 2, 4, 6, 8, a little bit longer. But this is in the same hour. Play 1, play 2. Crazy. Anyway, all right. So this one is at a new location I want to teach you. It's away from the 20. You see? So you got this one at or near the 20 and this one away from the 20. Oh, I like them both. You give me away from the 20. You see, here's the thing, guys. Stocks can get away from the 20. They can't stay away. You see? They can get away, but they can't stay away. You see, they have to always snap back to the 20. All right. So we get away. The bull 180 tells me, okay, it's time to snap back. All right. We get near. It tells me it's time to move away. So this is very beautiful to understand. When you are away, the bull 180 says it's time to snap back to the 20. When you are near, the bull 180 tells you it's time to move away from the 20. Wow. One location tells us it's time to snap back. The other location tells us it's time to move away. We put these things together, guys. The regular bull 180 and the baby bull 180. So two. And the two locations away from the 20 and near the 20. All you need are these four things: the regular bull 180 and the baby bull 180, and the two locations away from the 20 and near the 20. Now you know where to get in. Look at how much you know already. Boom. You know how much to put in, 25K. You know where to protect yourself. Boom. Boom. 25K. And if you are away, try to at least get back to the 20 before you take profits. If you are near, try to get away from the 20 before you take profits. Did you hear that? If you are away, try to get back to the 20 before you take profits. If you are near, try to get away from the 20 before you take profits. It's not rocket science, traders. It's trading. You know what's interesting? I'll share this with you guys. You know what's interesting is that trading comes across as being this truly complex, confusing thing, and it's really not. If you really think about it, trading is basic and it's simple, if not outright primitive. Do you understand? Why am I saying it's primitive? Because it only has three things: up, down, sideways. That's it. It doesn't have the capabilities of the human body. Like right now, about 6 billion processes just went off in that few seconds. That's crazy. That's complex. That is sophisticated. That is not simple. The market, there's green bars and red bars, boys and girls. There's the 20 period moving average and the 200 moving average, boys and girls. There's near the 20 and away from the 20, boys and girls. There's regular bull and bear 180 and baby bull and bear 180. There's buy above the red bar, protect under the green. I mean, come on. What I'm explaining to you is complex, really? Guys, it's freaking colors and lines. It's up and down. It's near and far. That's all trading is. Red bars and green bars, 20 and 200, right? Up and down, above and below. I mean, these are kindergarten concepts, which is proof that anyone can do this. So why is it that so many people don't or can't? They can't bring themselves to get out when it doesn't work. That's like 80% of the problem. There are other parts of the problem, like they see it and can't do it. Like, I see it, but I'm nervous and they can't do it. I can't help you there. Like, all I can do is give you the money, but you have to do it. I don't do it for you. You have to do it. And if you're afraid to do it, I don't know what to do. It's already not your risk. So I can't help a person that's scared. I can't do, I don't know. I'm not a psychiatrist. I don't know how to do that. But the main problem is when it doesn't work, you gotta end the game. When it doesn't work, you gotta fire your stock. You're fired. Remember, your responsibility is just to protect the account, protect the money. The stock has to move. You don't move the stock, right? And so a lot of people come to me, Oliver, what? You know what? This seems so basic and clear. Why is it that so many people fail? Because they don't stop the game when they're supposed to stop the game. That's really it. It's that simple. If you can become a professional stopper, if you can become a professional fire, be like Donald Trump when he was on The Apprentice. You're fired. If you can do that, do you understand? You can make it in this business. All you need. Now, another reason most people don't make it is because they're playing with baby money. All right, baby bull and bear 180s are fine, but baby money, that you're not going to make it. You can have all the skill in the world with baby money and get knocked around. You're just not going to. It's not going to happen. Not going to happen. All right. You're going to be bullied, outmaneuvered, dominated. You're going to be crushed. So you need the proper amount of capital. So a lot of failure is connected to just not having the right amount of money. In fact, most businesses throughout the world fail for being undercapitalized. Trading is no different. They're going to they're showing up to a gunfight with a little tiny knife. And you think you're going to win a gunfight with a little tiny knife. No, wait, let me pull out my little knife here. If you think you're going to win a gunfight with your little tiny knife, it's not going to happen. Right? So a lot of people fail because they've got the knife against the gun approach. But even if they have the right amount of capital, they fail because they don't fire when they're supposed to fire. All right. Let's get back to the game. All right. Let's go. All right. You can have too much, traders. You got to understand this. You can have too much. Like, you can give your child too much love, and that child becomes spoiled, a brat, incapable of doing anything independently or powerfully. You can love someone too much that they begin to take full advantage of you. You can be too nice. You can be too mean. You can be too smart. The people who are too smart never are successful traders. The brainiacs, they think too much. There can be too much light or too much darkness. There can be too much anything. Many people suffer from having too much month after their money runs out. I've got too many bills for the amount of money that I make. You can have too much money. Oh, yes, that is possible as well. Same way you can have too much of a bull 180, too much. Too big, too gargantuan. First of all, look at where your risk is. Now your risk is too big. And look at the upside potential. See, now you've got a backwards equation. Your risk is bigger than the upside when these bars are too gargantuan. You know? So let's understand that this is okay. See that little bear 180 right there? That size is okay, but this size is not. We bypass those. That's very important to understand. All right, let's go. Now, I was showing you some pretty old charts. Facebook at $111. Facebook's a $300 plus stock now, so it's triple from that price range, right? So what I decided to do after giving you the foundation, what I decided to do, traders, was I'm going to take every example now just from yesterday. Because a lot of people say, well, Oliver, you're just cherry picking the best examples. No, I'm not. I'm going to show you that this happens every single day, every hour of the day. just understand this. You will not have the ability to capture all of these. That's how frequent this is. I don't teach my traders something that happens once a month or once a week or once a day. Our approach is designed that when you put everything I teach you together, you should have the ability to be richer every 8 minutes of your life. People often ask me, Oliver, what is your definition of trading mastery? And that's it. That's my answer. From a short-term perspective, if you can have more money every 8 minutes, you have arrived at mastery. That's including the losses. You might have a losing trade and then another winning trade that's 3 times the size of your losing trade. Boom. If you can get to that place where every 8 minutes I have a little bit more money, a little bit more, I have some more. Oh, this one I've got a lot more. Like that, that's mastery. That you've arrived. Now, you can make a living before you arrive at mastery. Because look, if you have more money every week than you started, then if you have more money on Friday than you had on Monday, you can make your living that way. Shoot, you can make your living if I have more money at the end of the month than I have at the beginning of the month. Yeah. But I'm talking about ultimate level of mastery. I have more money every 8 minutes of my trading life. Now, I might not trade the whole day. I might trade the first hour, but I should have more money every 8 minutes. That is what I call the ultimate level of mastery. All right? And so my point in telling you that is this, that everything I teach is designed. I only teach what happens all the time, like so frequently that it's not a problem of you needing to search or wait very long. It's just qualifying the right ones and doing it correctly. All right, so I'm going to now go to just yesterday. We're just going to look at yesterday, and I'm going to show you how often this stuff happens just with yesterday. Let's go. All right, this is Facebook now. Now you can see, well, Facebook was 300. It's 200 and high $200 now. All right, now this is yesterday. Look at the date. October 17th. This is a 5-minute chart. So every bar represents 5 minutes of trading. And it's all the way to the end of the day. So this is one full day of trading. All right, now what I want you to do is I want you to start from here, the beginning of the day, and keep going until you see a bull 180. Do you see it? Boom. All right. So theoretically speaking, boom, you can take that, stop under the green bar. Now, this is okay. It's okay. It is not the greatest just because we got a little bit of distance from the 20. But for reasons I can't go into now, off the open, that's not as important. Later in the day, being near is important, or being far is important. So now let's go, but you can see that from a technical perspective, boom, there's your move. Now, this doesn't look big, but that's pretty big, guys. That's a pretty big move there. All right. Now, what I want you to do is I want you to now walk this move down, and you tell me when you see a bull 180. I'm sure you see it. Boom. Now, look at how far away from the 20 you are. So this, remember I told you, stocks, guys, remember this. Stocks can get away from the 20. See the 20? They can't stay away. Stocks can get away at the bottom too. They can't stay away. So these opportunities away are great opportunities. These opportunities near are also great opportunities to move away. The move away are great opportunities to play the snapback. Moves away are great opportunities to play the snapback. Moves near the 20 or the 200 are opportunities. This is near the 20 and the 200 to play the bear 180 here. I don't know if you can see that. Boom. You see? But this is the one I want you to focus on. Right there. Boom. At least back toward the 20. Okay? So beautiful. That's Facebook. All right, on the 5-minute time frame. Okay, I hope you see that. Here's another stock. I want you to find the bear 180 here. Now, this is the beginning of the day. Now, just track it from the beginning. Move up, move up, move up. Now, there are other opportunities my traders know to play. Here, my traders know to play this. Boom. My traders know to play that. These are other tactics, right? All right. So my traders will be coming in here. Boom. 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 All right. These are other tactics. Elephant bar. Tail bar. Tail bar. All right. But that's for another day. We're focused on the bear 180 now. So, oh, now look at your 20. Look at your 20. We get away from the 20 and boom. Now, again, this is all Friday, guys. This is Friday. Bear 180. Boom. Oh, that's a little too thick. Bear 180. Boom. Stop. How much? 25. 25,000 in. Stop above the high. At least get back to that 20. Guys, I tell you, I've been making and hearing that noise for 33 years. And I never get tired of it. Listen to it again. Whoo, I love it. Wait, you enter here, protect yourself. Now, listen. You see? Don't you love that sound? I love it. I love that sound. Now, some of yours, see, mine sounds like that, right? Some of yours sounds like this. All right, check this out. That's it. Oliver, why does mine not sound like this? Why does mine sound like this? We'll get you there. We'll get you there. We'll get you there. But that's better than this, sounding like this. Now, many of you, your sound sounds like this. Nothing. Nada. We'll get you there, though. We need you here. All right, let's go. Bear 180 away. Now, guys, look. Look at the 20 and look at your stock. Aren't you away? But you can't stay away. You can get away. Oh, yeah. Stocks can get away. They just can't stay away. Stocks can get away. Oh, yes. They just can't stay away. So these far aways locations are great opportunities to make ourselves richer. All right, let's go. All right. Now, you see the 20? We are away. We are away. We are away. You see, we are away. You see, you can get away, you can't stay away. You can get away, you can't stay away. You see, you can get away, you can't stay away. All right, you get the point. Now, we are away. This is still yesterday, JD, and boom. Now, notice your tail here. It's not above the tail. It's above the red. Don't confuse that. Boom! 25,000 in. Protect yourself. And there's that sound again, traders. Listen carefully. I want this to be your future. All right, this is not one of the tactics I'm teaching you now, but tail bar. Boom. Now, there is something I want to show you here. I can't go into the details, but you see this bull 180 here? This one didn't work back up. But there's a reason. There's a reason. Can't go into the details now. But there's a reason this one is not to be taken. But that'll be in the more detailed training with you. There are some that you need to bypass for certain reasons. All right, but okay, let's go on so that I don't want to keep you too long. I just want to make sure I get through the whole presentation here. Why am I frozen here? There we go. Just want to make sure. What is going on here? It's slow. Oh, there we go. Okay. All right, JD, here we go. All right, guys, I want you to find on this chart, this is Hilton, the hotel chain. Now, I want you to start from the far left-hand side of the side all the way to this side. Now, I want you to find, I want you to find the bear 180s and the bull 180s. But I have to explain something to you here with this one. You see this, what I'm putting on the slide? The 80% entry. I have to explain this to you. Okay, look. There are some times when the bar is a little extra long. Not too long to take, but extra long, where I'm going to tell my traders not to wait for the low or the high to be broken. So remember where I was telling you that the bear 180, right, is this. You have this green bar, and then you have the red bar, right, that boom, breaks the low of the green bar, and you enter there, right? But if this bar is a little extra big, I want you not waiting for the low, I want you waiting for the 80% elimination point. So let's go over this for a second. Look, once again, here is 10, let's say this is 10%. Here's 50%. Here's, let's say, 80%, right? So what would red, when would red hit that 80%? 10% down? 50% down? Boom, 80%. Boom, put your 25,000 in there, right there, and put the stop above that red bar so you don't have to wait all the way down here. What this does is it makes your risk smaller than this. You see? This risk is bigger than this now, the 80% entry. Now, let's go to this chart. Look at the 80% entry. Look at the green. Here's 10%. Here's 50%. Here's 80%. Boom! Stop above the red. All right? Now look at this green. Look at this green. All right? Here's 10%. Here's half. Here's 80%. Boom! You see? All right. Now let's look at this one. Look, 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 look. Look at this fat red bar. Here's 10%. Here's 50%. Here's 80%. Boom! Stop under the green. Wait a minute. Look at this one. You don't need 80% here. It's not too super big. Boom! Stop under the green. This is a beautiful, beautiful style of market play. Beautiful style. So we've got, this happened late in the day on Thursday, but here's an 80% bear 180. Here's a 100% bull 180. Here's a 80% bull 180. Here's a 100% bull 180. Here's an 80% bear 180. Wow. You can sit around, guys, and just wait to bull and bear 180 yourself to the promised land. You can pick the 2-minute chart if you want more frequent ones. You can pick the 5-minute chart if you want more certain ones to trade intraday. It's powerful. My most powerful tactic. It's powerful, guys. Some people ask me, Oliver, what's the accuracy rate? It's 82%. That's the accuracy rate of the 180. Now, what does this mean? This means that really out of 10 trades, you will win 8.2 times out of 10. So let's just call it 8 times. So you're going to have on average 2 losses, 8 wins. You can get rich with that. Especially if your 8 wins dwarf the size of your 2 losses. All right. Now, this is an 80% bull 180. I don't know if you caught this, but look, this is a 100% bull 180. See the fat bar? Fat red bar. And then green takes out the high of the fat. Boom! Stop under the green. All right. What would you say? Look at the size of this bar. Now, what would you say this is? Is this a 100% or is this an 80%er? You tell me. All right. Which one is that? I'm going to sip some coffee. I think some of you got it. All right. That's an 80% bull 180. All right. At least get back to that 20. All right, cool. Good. You've got this, guys. You've got this. There's something I've got to explain here. Now, I want you to note the 20-period moving average and the 200. All right? These 20 and the 200-period moving average. All right? Now, I want you to note how the 20 gets away, you see, from the 200, and then it comes near the 200. See? Then the 20 gets away from the 200, and then it moves back near. So just like stocks can get away from the 20 can get away from its mama. The 20 is like mama. All right. So the stock can get away. So stocks can get away from the 20, and the 20 can get away from the 200. So when you've got the 20 away from the 200, you can take plays the opposite way. When your 20 is away from the 200, you can take plays the opposite way. When they're together, you take it with the way. With the way. All right? But apart, you counter. The counter move is the better play. All right? Now, when you've got your 20 separated like this from the 200, what gives you your signal? Boom! Bear 180. I would be all over that. Guys, let me just tell you something. You show me this occurring with this wide separation and this low risk. Look at my risk. Enter 25,000. Boom, risk. This is my risk for that potential all the way back. Let me just tell you something. At times, I don't know why this screen is, let me just see if I can get this. It looks like it's frozen here. But let me just see something here. Let me bring it back. Deactivate, activate, boom. Okay, yes. All right. There are times, guys, when I see a play setting up like this juicy bear 180, right? And it's coming, the red bar's coming. Here's the bottom of the green, the red bar's coming. And I'm like, saliva, I have to admit, begins to drip down the corners of my mouth. My hands are on the keyboard, right? And the saliva's dripping. Now, sometimes, should I wipe? And oftentimes I choose, I'm not gonna wipe until boom, that $25,000 in there. Then I wipe. You know what I'm saying? Don't miss the trade just because of a little bit of saliva. That's the moral of the story. I love it. All right, boom. All right, this is another tactic for another day. All right, bottoming tail bar tactic. That's another day. All right, but I want to bring your attention to this. Here's it's almost like freaking repeating the same. Markets just repeat themselves over and over again, traders. It becomes repetitive, but that's where consistency comes in. Just, I love that sound. Loving it. All right, let's go to the next one. Now, what I want you to do is you're going to take, right? You're going to take you're going to take this 5-minute chart. You're going to start at October 17th. That's yesterday. Now look at your 20. Now look at where the stock opens. The stock opens here and goes down there. And you say, this is far away from the 20. There's some good odds. I'm not sure, but there's good odds that this thing tries to snap back toward the 20. So then you get a freaking red bar. And you're saying, Now nothing else has happened yet. You don't see this yet, guys. Look, take a look. You don't see this yet. None of this has happened yet. You're like, this could keep going down. But if it doesn't, oh my God, you're saying this right now. The better play is up, not down, because we're already down. You see, we're already down. So the best play is actually up. See, the best play here is down. See that baby bear 180? Because you're not down. But see, the best play here is up because you're already down. All right. So you're saying, whoa, red bar. I don't know. It could go down, but my God, let me get ready just in case a green bar takes that out. And boom. And then all you do is hear that noise again. That sound. Beautiful, right? It's freaking beautiful. This is all yesterday. I was showing you stuff from yesterday. You get it, guys. It's not rocket science. Is it 100%? No. Nothing's 100% in life. If it was 100%, we wouldn't need stops or protection. We always need protection. Remember, 2 out of 10. You should be winning 8 times out of every 10. Look, you get a way and a bear. A bear 180. Boom. Look at your bull 180 near the 20. It can be above, on it, or slightly below it, but remember, boom, under the green. Gotta love it. Beautiful. So, bear and bull. Now, there are many other opportunities on this chart that my traders would be taking advantage of. Uh-oh. Is that a baby one? I'll take it. I'll take it. Is that a baby one? I'll take it. I'll take them all. I take all of them, guys. I take all of them. I take all of them. I'm an equal opportunity 180 player. I take them all. The baby ones, the fat ones, the skinny ones, the little ones, the tall ones, the black ones, the white ones, the red ones, the green ones. I want them all. I take them all. Now, guys, here's the thing. All right, that's even good coal. Colombia, I love you. Damn. Okay. I get this question every week of my life. Oliver, if you're so good at this stuff, why are you teaching? Why are you sharing? Why are you selling courses? Like, guys, look, I don't sell courses. I don't do that. I put traders in business. You got to understand. I don't sell you a course and take your money and at the end of the course, shake your hand, do a Hail Mary and say goodbye. This is what I do. I look for traders to give my capital to. I'm not interested in just teaching you and sending you on your way. Like you do nothing for me by sending you off on your way. I teach you so that I can put you in business, and then you go over there in that part of the market. I will be over here. Another trader will be over there. So check this out. I'm playing the Bull 180 in Microsoft right now. Boom. But what about the Bear 180 in Twitter? What about the Bull 180 in Starbucks that's going on right now? What about the Bear 180 in Facebook? What about the Bull 180 in Apple? I can't be in Twitter, Facebook. I can't be in all of those places at the same time. But I told you I want it all. I'm greedy like that, I guess. So years ago, I realized that I'm doing well, extraordinarily well, but I could be doing better if I trained an individual to go out into the market with my money. And so now, let's say two people, me and another trader, we split the market in half. You got that half of the market. I don't have to worry about it. I've got this half of the market. Now, would we make more? Absolutely. As a team, absolutely. But wait a minute. What if I had 4 traders instead of, including me? Now we split the market into 4 pieces. The accuracy goes up and missing opportunities becomes less. And in this way, 1 + 1 = 7. It's not regular math. This is not about being a nice guy, even though I am a nice guy. This is not being generous, even though I am generous. This is about money. I make no bones about that. I don't spend time with you out of the goodness of my heart, even though I do have a good heart. I spend time with you because I'm looking for people who want this opportunity. I'm looking for people who think they have what it takes to get into this business and do it professionally with the right amount of capital. Let's make freaking money together. Let's do it the right way. Let's not do it the YouTube way. Come on. You can't learn how to trade off of YouTube. My videos help, but that's not how you learn. You can't learn how to do brain surgery off YouTube. You can't learn how to play golf off of YouTube. For any golfers out there, you know that's the case. I'm going to watch a few golf videos and now win a championship. It doesn't work that way. You can't win as a trader watching YouTube videos. They can help, but it's just that's all preparatory work. You need real proper training and real money to do this, you know? And so I'm looking for business-minded individuals that want a change in their life, or they want an opportunity to get into this field without having to put $25,000 to $50,000 in their own brokerage account, because that's what it's going to take to even start and try. So I'm bringing professional style Wall Street to Main Street, and I'm doing it with my own capital. How many people in this industry will tell you that now that I've taught you what I know, will you take my money? Will you take my family's capital, please? Don't risk yours. Take my family's money. That's how much faith I have in my tactics, my strategies, my ability to train you, my ability to teach you. Can I please? Thank you. All right. Do you understand what I'm saying? That's what I'm looking for. I'm not looking for your course money. Trust me. All right. I'm looking for business-minded entrepreneurs that want to take this route. And this will be the smallest cost route that you can possibly take in this business. All right. Let's quickly move on. I'm almost done here, guys. Wow, look at this one. This is beautiful. Look at the bull and the bear 180s. Do you see them? Start off here. What about here? Wait a minute. You are now away. Wow. This is all Friday, guys. All Friday. That's amazing. Fat red bar. Crazy. You gotta love these things, guys. This is just pure opportunity. Bull 180. Fat red bar. Boom! Right near the 20. my traders would also add there. So what my traders would do, they're taught to put 25,000 in right here and add the rest there, or part of it. Boom. Beautiful. Gotta love this. You know which one this is. This is not a 100% one because of the size of that red. This is an 80% one. Look at this one. Did you catch it? Now, this is not too far above, but it certainly stopped the move up and brought it back, right? Now, look at that fat red bar. Boom! Protection. Guys, now I'm bored. You know this. This is just now repetitive, because what I would do now, having taught you this tactic, is I'd have you go out and start practicing identify. Show me the bulls. Show me the 80% ones. Show me the 100% ones. Show me the ones far away. Show me the ones near. Show me the bears. Show me the bulls. I want 180s spilling out of your ears. You understand? I want you wearing t-shirts that say 180, hats 180. You know, I want you doodling 180s. I want 180s just seeping from your pores. I want you to see 180s in traffic. Red car, black car, white car, black car, side by side, bull 180. You understand? I want you dreaming bull and bear 180s. And when it becomes that second nature to you, that natural to you, where you can take a look at a chart and say, there's the money right there, and there's the money right there. Whoa. I put a chart in front of you and say, Oliver, there's money, that's $300 right there. Boom, that's $425 right there. Wow. And imagine 14 of these tactics together. Now it's not just, there's money right there, and there's money right there. No, there's money right there, there's money right there, there's money right there, there's money right there, there's money right there. When you got all 14, there's money all over the place. Not just here and then there, you know? So you need all 14 of these things. But this is one of the most powerful ones that I'm sharing with you today. So like I told you guys, I was going to share something with you that whether you become a member of my trading family or not, you can use this. That I'm not giving you something that has just a tiny bit or no value. This is hugely valuable. That is whether you're with me or not. And that is something that I try to do every single time I'm afforded the opportunity to speak into a mic like this, to address you. I know your time is very valuable. I appreciate you being here. Please like this video. Do it right now. I'll take another sip of coffee. Like that video. I want you to pound that like key right now like this. Boom, like it. Like it. Do it now. And subscribe. All right, I'm not done with you yet. I need just a few more minutes. Just a few more minutes. But guys, I'm constantly trying to do my best to make sure that every time I'm given this gift of being able to address you, that I leave you better than you were. I hope I've done that so far. I want to leave you more knowledgeable. I want you to be more elevated, more sophisticated. I want your eyes different when you look at a chart now. I want your confidence level different. And so every time I'm given this ability, I try to pour something into my presentations that leave you that way. And I hope I've done that so far. Okay? But know at the same time that if you feel affected by this, this is one very small, it's a powerful one, but it's a very small corner of what I want to teach. I want to transfer my 33 years of doing this. Guys, there aren't many people in this industry doing this for 33 years. There's some, but there aren't many. There aren't many. There aren't many people with a documented history. Guys, you can document my history. All right. And so let's bring this home now, shall we? Let's bring this home. All right. You guys know these things. You should know these things in second nature now, you know? These should not be very difficult for you right now. Now it's just repetition, 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 which is where your profits come from. Now remember, guys, I want to put you through this. I want to teach you not just this tactic. I want to teach you all the tactics, all the strategies, how to protect yourself, when to add. Do you know that every big trader adds to their winning plays? When do you add? How do you add? How much do you add? You can come down. Not just adding. When do you take profits? How much do you take profits? Do you take portion of your profits? Do you take all of your profits? When do you bail on a play? When do you exit the play before the stop because you realize this is not right? All of that I want to teach you. How do you ride the play out for maximum profitability? What are the exceptions? When does a play appear to be perfect, but it's really not? Don't take that one. All of these things I want to teach you. This has come from 33 years of trading experience, traders. And I want to transfer that experience to you. I don't want you having to spend 8, 10 years trying to accumulate enough experience to do this right. I want to give you the experience right up front. And then I want to give you the capital. And this will greatly shorten your journey toward mastery. Right? It took me 6 years to make my first profits in the market. 6 years, guys. I don't want it to take 6 years for you. So I want to teach you all of that, and I want to give you the capital. I don't want you trading with your money. Listen to me carefully. This is very important, traders. All right? Very important. I don't want you trading with your capital. This is why. Number one, it is proven on Wall Street. This is proven decades ago that traders are better when it's not their money. You see, you're more intelligent when you have my money. You are less intelligent when you have your own money. You are more responsible when you have my money. You are less responsible with your money. You are more careful with my money. You are less careful with yours. You're more profitable with my money. You are less profitable with yours. This is a fact. It is why billionaires form hedge funds, to bring other money into the hedge funds to mix with their money. Why does a billionaire want other people's money to go into his hedge fund? He's already a billionaire. Do you know why? You would say, well, Oliver, that's like the same thing was, Oliver, if you're so good at this, why do you want other traders? That's stupid. It's really a stupid question. Why does a billionaire have a hedge fund? Most of them are billionaires that own the hedge fund. They're already a billionaire. Well, it's not about being a billionaire or not. It's about earning. And so they know that if they have other people put money into the hedge fund that's mixed with their money is held to a higher standard, which means that that billionaire hedge fund owner trades better when their money is mixed with other people's money. You're more responsible when you have the responsibility and other eyes are on you. So that's reason number one. You're better when it's my money. You're worse when it's your money. This is a fact in the industry. Number two, all right, you have enough pressure on you becoming skillful and good without having the added pressure that it's your family's money, that you could blow it all, that you need the money, and you're nervous now going into every trade. You're not going into every trade confidently. You're not being a bold trader. You're being a shy trader because you can't lose the money. This will end your chances of survival in this business. You can't approach trading with that mentality. I'm scared of losing this money. You can't do that. No trader on Wall Street is trading his own money. Think about that. No professional, zero. Even if they have millions of dollars in the bank, they are not trading with their own capital. You know who trades with their own capital? That's right, novices. Regular retail novices trade with their own money. Professionals do not. All right, it's a different game. So you should be looking to do this professionally, not regularly. Okay? Now, I want to give you the $50,000 account to start. You're going to first have to demonstrate $3,000. You don't have to make that in one day. It might take you 3 months to make $3,000. All right, fine. It might take you 6 months. It might take you 8 months. Some traders take a year. It doesn't matter. You can make the $3,000 in 2 years, 5 months. It doesn't matter. It's when you do it. It's not on a time limit. Okay? Remember, you have to do it without losing $300 on any given day or $600 on any given week. And I have algorithms that force this rule on you, which means that if you go negative by $301 on any given day, you've got 6 seconds. And if you don't end all of your plays or get out of everything inside of 6 seconds, my algorithms will auto liquidate the account and shut the account down, and it will not be operational until the next day. I mean, I'm generous, I'm not stupid. So I do have algorithmic trading robots that back up my money when you fail. All right? Once you do this, we are in business together. This is a partnership. I give you the $50,000 account, you earn 40%. I get 60%, but you have zero risk. And your goal is to get to these two levels here, because this is where serious money can be made, guys. You can make money here. A lot of you can earn your living right at level 1. But you want the big money is at levels 3 and 4. That's where some big money can come in. And I want to give you this opportunity. Now, if you don't do this and you want to do it on your own, you do realize that in order to trade actively each day, that by law, you need a minimum of $25,000 in cash in your account at all times. If you lose and this drops to $24,800, you cannot day trade. You'd have to bring your account back up. It must stay above 25,000 at all times. So in order to do this without a program like this, you need to make an investment in an account of 25,000 or more. Because remember, 1 penny under 25,000 and you end, your account can be seized if you day trade with less than 25,000. They can seize your account and hold it in seizure for 6 months. That is the law. With my program, I put the money in. And so you do not need this. Okay? Now, let's talk about, this is it in Spanish, right? So let's talk about the program. There are a variety of programs. This is not a course, traders. Do not think this is a course. This is not a course. This is a business. This is a business program. This is putting you in the trading business. And it has no expiration point. There's no end to it. Okay? The most popular course name that I have is Self-Start Trading Program, right? Now, these are the regular prices, guys. Look, for the Self-Start program that comes with the $50,000 account that you can grow to much higher, it's $1,700. This includes you being trained every day of your life forever. Traders, listen to me. There's no end to this. You are trained every single day for life. You get a full course on all of my tactics, every tactic, every technique, every strategy, but you are also handheld. You are also guided. You are also with professional traders every day, including me, that teach you, guide you, direct you, and trade with you every day of your life. And this never stops. Now remember, if you do this on your own, you need $25,000 or more to day trade. With this program, you need $1,700 for life. And that's it. Now, guys, look, think about this. Think about what this is over a year. All right? So let's just say you should give yourself 5 years. All right? You should give yourself 5 years, right? So if you were to take this $1,700 and divide it by 5 years, that's $340 a year. Guys, you go partying with more than that. Some of you have dinners with bottles of wine that are more than $340. Do you understand? You go on a mini weekend vacation for more than $340. All right? It's $340 a year investment to be in the best business in the world. But check this out, guys. Check this out. So there's 365 days a year, right? Which means that there are 1,825 days in 5 years. Now, you're going to take $1,700 and divide it by 1,825. And you know what your cost to be in this program is? 93 cents a day. That's how my mother taught me to look at whether something has value. Oliver, break the cost of something down to a daily amount and see if it's reasonable to you. Are you getting 93 cents worth of value a day over 5 years? My mother taught me this technique. That's how you look at it. You don't look at the big giant cost. You look at the daily cost. And then my mother taught me you compare your daily cost with other things that you are spending this 93 cents on. Like if you buy Starbucks coffee for $1.85, you are spending more on Starbucks coffee than on your future, than on a business opportunity, than on being educated and trained every single day of your life in the best business in the world. If you are buying a Snickers bar or a can of Coca-Cola that costs more than 93 cents or a bottle of water every single day of your life, you are putting more money into bottles of water, which are healthy, but Coca-Colas and candy bars than you are in what can potentially make your whole life different. Do you know how easy it potentially is to get $1,700 back in this business? One trade, 1 week, 1 month, certainly 1 year. So you got to think of it this way. Now, some of you might be interested in the full course. This is all you ever need. Self-start, which is this, plus live trading camp. This is where I take you personally. You spend 10 weeks with me learning how to trade the first 20 minutes of the trading day. That's my specialty. I want you to be able to earn your living in the first 20 minutes of the trading day. So this is the whole program, but this is the 20-minute specialty. You add these two things together, all 14 strategies, everything that you need to play the markets properly, but you also add the 20-minute specialty. There's nothing else that you ever need in this business, ever. Nothing else to learn, no other techniques, no other anything. It's just now up to you to do it. This total is $3,000. Now, the live trading camp all alone is $1,300. Now, if you can't do the both things together, then do the self-start. Start somewhere. And if you can't do the self-start, maybe you do the live trading camp first and then come back to the self-start. But remember, the self-start is with the account. This is not with the account. This is just the 20-minute specialty I want all of my traders to have. Now look, as low as these prices are in reality, all right, guys, there has to be a cost to this. Understand? There's gotta be. It costs money to train you. It costs money to pour resources into you. It costs money to pay other traders to work with you, to train you, to educate you, to be with you every single day. It costs money to have support, a support team. It costs money to have it costs money to create you into a professional trader. It's a business after all. It can't be zero. Nothing zero is really worthwhile anyway. All right? But look, guys, here's what I'll do. I will drop the cost. Look at where I'm dropping it from, guys. Look at where I'm dropping it from. I will drop the cost from $1,700, right, to $1,500. Now that's less than 90 cents a day. To be all in and need nothing else, now it's $2,000. Guys, look at me. Look at me. Look at me. Many of you will pay more at the dentist to get your teeth fixed. One procedure. Some of you will augment your bodies or whatever. Some people say I've augmented my body. It's crazy. But some people will augment their bodies for more than $2,000. I think the average surgery is $3,500 on something. It's crazy. All right? You will go on a weekend vacation for more than $2,000. This is something that has the potential not just being a cost, it's an investment that can pay off in spades. To make $2,000 in this business, guys, some traders do it in 30 minutes, a day, a week, a month, and this is for life. So I want you to think of it that way. It's not a cost, it's an investment. And remember, all right, remember this. To do this on your own, you need $25,000 or more of your own money. Instead, you can do this or that instead of this and still not know anything. All right? And I'll even go further. If you sign up within the next 48 hours, If you commit within the next 48 hours, I will give it to you for $1,300. Guys, what is this, 50 cents a day? This is crazy. Now, everything is $1,800. One fee for the rest of your life. If you can only do the live trading camp now, okay, so now you're down to $700. There's no excuses, guys. You're getting one of the best, if not the best trainer in this business. You're getting one of the most seasoned traders in this entire industry. Honored, decorated, rewarded. And get this, sign up in the next 48 hours, and guess what? I will give you the 60%. And I will take the 40%. So you get the 60% of all gains. I will take the minority partnership, and I will take the 40%. And so now you run the business. Guys, this is a business. This is your business. I am just funding your business. But there's one more thing. You see this 60-40 split? I'm going to give you 100% of all gains until you get your cost completely back. Whether you have paid $1,300 to get in or the full program, you're going to get 100% of all gains up to your initial cost. Once you get your initial cost back in your pocket, that is when we become partners. Now, there is nothing more fair than that. It is in your power to make this program free. So here are your goals. Your goal is, number one, to get trained and educated. I will make sure you do that. Goal number two, graduate that first training level. Make that $3,000. That's goal number two. Goal number three, get your money back from Oliver. I want you to do it. And then goal number four, now that we're at our 60%, 40% split, 60% goes to you, make us a fortune. You got the goals? Goal number one, get trained and educated. I will train and educate you every single day. As long as you have my money, you're going to get trained and educated every single day. Goal number one, done. Train and educated. Goal number two, graduate. Goal number three, get your money back. Goal number four, make us a fortune. You can do this, traders. I know this opportunity is not for everyone. It's not supposed to be for everyone. But guys, look, if you can follow two colors, red and green, two moving averages, 2,200. Two locations, far, near. You've got this. Like all things of value, there's a little upfront cost, but it is far less than doing it on your own and far less risk to your family. And in addition to that, you can get it back. It's up to you. Do you have what it takes? Now, most people do not make it in this business. I have to tell you that. You have to ask yourself, do I have what it takes to be disciplined enough to cut when I'm supposed to cut? Do I have discipline enough to take my profits when I'm supposed to take my profits? Can I let the market do its job? Can I do my job? Can I follow 2 bars? Can I follow 2 colors? Can I follow 2 moving averages? If you think you have the ability to do this, it's potentially can change your life for a small little upfront cost that is 100% refundable if you do the right thing. All right, traders. Whether this is for you or not, I want to thank you from the bottom of my heart for trusting me with your time. I know there are many things you could be doing with your time right now. You could be out with your family. You could be out with your dogs walking around the park. You could be at the mall shopping. You could just be watching TV, but you're here with me. And I do not take that for granted. And I want to thank you so much for your trust. Whether you are part of my family or not, whether this is a program that you think is for you or not, I want you to stay close. All right. If you continue to have interest in trading, make sure you follow me here on YouTube. Make sure you like this video. Please make sure you subscribe to the channel. Okay. Turn notifications on. And for those of you who are going to join this in what I consider to be one of the best activities on planet Earth, if you are going to join and become a family member of mine, I want to be the first to say, welcome to the family, guys. All right. You can do this, guys. You can do this. Yeah. Woo! We did it again. Boom, 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 boom. I love it. Love it.